and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by ctmfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host, Pushpendra Mehta. Joining me today is Craig Jeffery, Managing Partner at Strategic Treasurer. Welcome back, Craig, to another episode of the Open Treasury podcast.
Push, it's good to be here. I'm looking forward to certainly most of these topics to cover, so thanks for having me.
Awesome. We truly appreciate your time and insights as we explore critical topics shaping the landscape of corporate treasury management and beyond. In today's edition, we shall discuss four topics, namely Predictive AI versus Generative AI in payments fraud detection, concerns over international payments putting UK businesses off, global economy tip for soft landing, and finally, Bank of America adds intelligent transaction search to its banking platform, CashPro. Our audience can watch videos on the CTM File YouTube channel and explore insightful articles, interviews, and industry roundups on ctmfile.com either by visiting the website or by following the links provided in our show notes. Let's commence today's discussion with our first story, which is about predictive AI versus generative AI in payments fraud detection. The dual role of artificial intelligence in payments fraud highlights a profound dilemma. The same AI that can be exploited to perpetrate payments fraud can also be used to prevent and detect payments fraud. Yet in the paradox of AI and the ongoing battle between the engineering and the prevention of payments fraud lies the potential for AI to emerge as a sophisticated solution and dominant power to combat payments fraud and ultimately tilt the scales in favor of AI as a stringent ally in fortifying payment security. In recent times, generative AI and predictive AI used in fraud prevention systems have become important and frequently discussed topics among business leaders, finance, treasury, and information security professionals. Given that fraud scams and bank fraud schemes cost US $485.6 billion in global losses last year, as outlined in Nasdaq and Verafin's 2024 Global Financial Crime Report. Generative AI is used to create or produce new content from existing content or data, while predictive AI analyzes current and historical data to make predictions about future events. According to the Payments Intelligence Generative AI Tracker, Can Generative AI Break the Payments Fraud Cycle? Generative AI could become a cornerstone of modern payments fraud prevention strategies, promising significant improvements in accuracy, efficiency, and cost savings, while predictive AI has achieved nearly prerequisite status in recent years for modern fraud detection. Generative AI is proficient at uncovering complex and nuanced patterns that traditional rules-based systems fail to detect, like irregular or unusual transaction amounts and atypical spending activities, as per the Payments Intelligence Generative AI Tracker. Conversely, predictive AI is adept at spotting known or familiar fraud scenarios but might fail to catch emerging threats. Generative AI also demonstrates a distinct advantage over predictive AI in addressing sophisticated fraud activities and detecting novel synthetic fraud. Craig, your company manages SecureTreasury.com, a cloud-based training program designed to reduce the risk of corporate payment fraud. Your enterprise strategic treasurer also offers in-depth payment security assessment service for corporate treasury departments. Given your extensive experience in payment security and fraud prevention, do you believe that generative AI's notable strengths gives it a distinctive edge over predictive AI, making it the preferred choice for payments fraud prevention and detection? Or do you think generative AI and predictive AI are designed to serve complementary purposes in payments fraud prevention, making it more sensible to leverage the combined strengths of these technologies to fortify payment security?
To your first question about the difference between generative AI and predictive AI in terms of its total strength, that's hard for me to answer. I would tend to think that generative AI is very helpful in creating additional models compared to predictive AI in the actual task of identifying anomalies or identifying issues and stopping those. I'll say that in the context of, if you think back to computers playing chess, some of the early days where Deep Blue played Kasparov and then lost and then won. And then as the chess models went on, they added every single chess game that had been played in any tournament where they had captured the information from basically all of human history. They put that in there. And so those models were quite good. And then you compare that when you put some of the AI models in there that would, you trained it on how the game worked, and then you use the computer to play itself, not necessarily having any of the history of the games. The computer models that played themselves, one example was it played itself over a 9-hour period, played millions of games. It would just keep playing and learning from that, right? Detecting patterns and figuring out how to do better over time. When that computer played the ones that had all of the existing models, it won. I think it won 28 times and tied 72, or tied 28 and won 72, didn't lose any. And so when we think about using generative AI, or we think about building models and playing itself, it's easier to create far more, payment models to run and test than you could if you loaded all the data that exists that for all the transfers you had. And usually when you're loading that data, you might have concerns about privacy. And so it's very powerful for building the training. And so that's its real strength there on the predictive side, and using is how you're going to apply it. So one's like the set of knowledge that it has, and one is how it executes. So it's hard to say one is better than the other. I'm going to go with both on that. And using the example of the models of AI and the chess playing for that. I think can't remember how you said in the beginning, but you basically said this is like a really important tool in the tool chest for how you would fight fraud. And I think that's very, very much the case. It's not the only tool at all. It's a tool that your company has to have some facility with it, so it requires training. But we're going to see that more and more to protect against this onslaught of fraud.
That's a really insightful perspective, Craig. Could you shed light on any other aspect of payment fraud that you think is important for treasurers to be aware of?
I think most people who are listening to the Open Treasury podcast are pretty familiar with some of the uses of deepfake and the relentless attack that companies are experiencing across the board. So, that idea that AI is a great tool but not the only tool is a helpful perspective. We need to validate and be sure of who we're paying, and there needs to be processes for that. I think the other aspect is the criminals are using these tools to weaken or subvert any security layer you have. And if you have a security layer, they'll try to remove security layers as well. So I think that makes a lot of sense. And the other perspective, too, is if you're overseeing payments, you're the treasurer, maybe you're even in IT or whatever area it is, and you have some aspect of oversight of payment security, if you think your company is at risk, that's healthy. You think your company is at risk and you need to continue to improve your defenses, that is a healthy and appropriate view. You don't have to be panicked about it, but it should be a realistic assessment. You're not safe. If you think you're set, if you think we're good, that I think is very unhealthy. Your company is at risk because the threat level continues to increase. And I think that's probably the most dangerous mindset, is to say we're set. You may be, we've looked at this, we continue to monitor it, we've done everything we know, but I want to continue to monitor and pay attention to it. That's a much healthier position. So we want to use all the tools that are available. We want to continue to increase our defense. Those are the most important mindset aspects for companies.
Those are wise words. Thank you for sharing that with the audience, and I hope they pay attention or heed attention to what you've just said. Next up, let's delve into the second story, which focuses on international payments fears putting UK businesses off. Concerns over international payments are putting many UK businesses off using overseas suppliers or selling to other markets, according to an HSBC UK survey. The survey of more than 1,000 financial decision makers reveals that 43% are discouraged from doing business internationally because of uncertainty over hidden payment costs. Other concerns include payment security and dealing with different currencies. The survey also reveals that age is a factor in confidence levels regarding international payments. Of respondents aged under 35, 60% are reluctant to do business internationally because of payment security concerns, and 58% are put off by dealing with different currencies. In contrast, of those 55 or older, just 27% share the same concerns over payment security, and the same proportion were put off by dealing with different currencies. Craig, hidden payment costs Payment security concerns and dealing with different currencies seem to be the bugbear for businesses in the UK when working with banks for cross border payments. Is this a question about age, experience? Any suggestions on what can be done to mitigate these concerns?
It's like, why is this the case? Usually in my mind, I have some reason why the data makes sense. When I looked at this, I was like, it seems odd to me. There's certainly a level of the more experience you have, the more familiar you're going to be with dealing in multiple countries and currencies. Hearing this is from UK businesses who are used to dealing in multiple countries, more so, let's say, than their US or Canadian counterparts, right? The US is a bigger economy. And treasurers, for example, are far more international, equivalent size organizations, far more international and global if they're based in Europe because the countries are smaller, they're dealing cross-border sooner. And this type of mindset almost seemed more like the bias of what a U.S. person may think. It's like, oh, it's just a pain dealing outside. Let's focus on, on our country, sales within the organization. So it didn't make as much sense to me. Like, I can't figure out exactly why that is. Is age a factor? Is there a correlation? Obviously, there's a correlation with the data. Is there a causation on that? What brings that to bear? I mean, they've always had different currencies. It's not like Brexit changed currencies. And more of the changes that are coming in new payment rails are affecting everybody. So I don't understand this. It seems counterintuitive to me. Usually, I would say my expectation is that people who are younger are far more open to, I don't have fears. I don't know what can go wrong. And as you go through and you experience losses or issues or problems, those kind of factor into your head. It's like, I want to avoid all those pitfalls. So I would think that as you become more experienced and as you age, you would be more hesitant and reluctant, not when you start out. And so I don't doubt the data, but I don't know that I can add much value to why that is. If the conversation was about what makes things hard, what makes things easy to deal with the currencies, that would be easier to talk to. I mean, does it make things opaque? Is it complex? Is it difficult? Is it costly? Those are hard, not good things. If it's transparent, simple, efficient, and effective, well, there's massive value in that. And so we continue to see the impact of globalization and the explosion of new payment rails, new payment types, formats, methods of compliance. All of those create more challenges. And so I can't figure out why age would be a factor there. But solving those from visible and clear versus opaque, simple as opposed to complex, efficient as opposed to difficult, effective as opposed to costly, or however you want to match those up. The more that banks, third-party payment providers, FX providers simplify that, the more powerful that tool is at any age. And I can make sense of that, but I didn't quite know why the others varied.
I guess, as you mentioned, it's all about simplification, Craig. Let's turn our attention to the third story, which is about the global economy that is tipped for a soft landing. Standard Chartered expects a soft landing for the global economy in the second half of 2024 as inflation slows and interest rates ease following a quick succession of economic shocks in recent years. The bank's Global Focus Economic Outlook Q3 2024 covers the outlook for 58 economies, key geopolitical issues, and financial market implications. Forecasts broadly flat GDP-weighted global growth of 3.1% in 2024 and 3.2% in 2025, following the 3.2% achieved in 2023. This benign soft landing scenario, however, could be put at risk with potential negative geopolitical surprises on the horizon. Craig, do you concur with Standard Chartered's viewpoint and expect a soft landing for the global economy in the second half of 2024? Or do you think the ongoing US-China trade tensions and other geopolitical risks may crash a 2024 economic soft landing?
Most of the economists now are stating, and we would have to agree, we like their arguments, that it is a soft landing, down to low growth, but positive in most of the economies. We've seen some economies that dipped negative into recession, dipped lightly and recovered. And so that is our expectation going forward, right? It's the Fed has had to hold rates higher for longer as opposed to easing as they balance out full employment and cost issues. So it seems like that's tending to work pretty well across a lot of the larger economies, and that's the driving engine for most of the world. So if you look across the G7 and G20, that's a huge portion of the economy of the world, and it's having an impact. So I think that soft landing coming down not tipping into recession and moving up is what we would expect. Now, you mentioned the geopolitical issues, and so that's all bets are off. If there's different kinds of war, if there's massive trade deals that are positive, or there's embargoes or heavy tariffs that slow down trade, those are the issues that can push soft economies into the negative territory and create this bit of a ripple effect for a while. So we're not in such a strong economy that we can afford those type of negative geopolitical issues, particularly if they're man-made, man-caused by certain restrictive trade activity.
Let's shift the conversation to the fourth news story, which is about Bank of America adding intelligent transaction search to its banking platform, CashPro. Bank of America has unveiled a transaction search engine with integrated investigation capabilities on CashPro. The new capabilities were developed with feedback from Bank of America's clients and are the latest updates to CashPro Data Intelligence, a suite of tools that companies can use to gain insights into their treasury operations and processes. In addition to speed, the search engine delivers visibility into a company's transactions, providing details such as payment status, incoming and outgoing messages, Swift GPI tracking details, and images. Craig, Bank of America has unveiled a transaction search engine with integrated investigation capabilities for corporate treasury through its CashPro platform. According to you, what would be the primary benefit of these new capabilities for corporate treasury departments?
This article is interesting, and it comes in line with much of what BofA has been doing and the CashPro team. Tom Durkin's group runs the CashPro team, and they don't let up for a minute. They're constantly pushing for development on the self-service front, making it easier for people to self-serve and get their answers. That's powerful for the clients, it's helpful for the bank. And so this idea of this continued growth of the product, capabilities of the product, is also reflected in the number of awards that they pull in. CashPro pulls in lots of awards because they're relentless in it. But to your question about why is this valuable? Why can this be valuable? Where is value? Things that help with visibility, things that help with self-service are very powerful. And so this is exactly that. If I can ask the question and I can type it in human language and it gives me the information I want, then I'm not involving someone else. It's faster. I like that better. If it predicts it and tells me, that's great too. But this idea of self-service giving me visibility as opposed to opaqueness, like I mentioned in the last thing. If I can't see something, that's not good. If my trading partners don't see something, they call me. It creates an interruption or a defect or some type of interaction we don't need. I only want to speak to people when it matters. I want it to be the most efficient, and it's most efficient for the bank and most efficient for the corporate treasury practitioner, the AR person, the AP person, if they can do that in a direct self-service way and then connect with people as and when it's necessary. So I think that matters. The other areas, I mentioned it in terms of the search, this ability to use natural language search is far superior than I go to the research queue. I have to type in 7 characteristics about the payment, the transaction, the date, the value amount. I was like, why can't I do that in English language? I can do that in my search engines. Well, there's reasons for that. You have to have everything built out so that it can handle that, or you have it built out on a modern cloud-native platform that allows faster development of things like natural language search and these unrestricted queries that have a huge set of capabilities and very, very rapid response time. So I think those are the key things. I want to do it myself. I want to see what I need to see, and let me use the programming language of, in my case, English, to get the responses versus lots of query screens.
Well, thank you, Craig. You made some great points. Finally, what is your choice of the biggest or most important story of the past week and why?
Well, if I restrict it to these 4 stories, I go with the soft landing for the global economy in the second half of 2024. I think we're seeing that. It looks that way. It can change. I think that's a broader financial impact, probably the most impactful for everything that goes on. On the payment front or on a more operational side, I think the payments fraud detection, the article about AI is pretty good. I think the nice thing that we're talking about now is we're not talking about an assassinated former president of the United States. That would have consumed everything we're talking about. It would have been horrible individually, but also extremely impactful globally, not just the U.S. So I'm glad that's not the story articles that we're talking about now. So
Right. Is there anything else that you'd like to highlight? Anything else that comes to your mind which you think is important for treasurers to keep in mind?
We've talked before, I know you've had guests on where you've talked about the number of elections that are happening in 2024, and that continues to roll through the globe, and the U.S. election is one of those, and being based in the U.S., we tend to think about that, and there's a lot of changes and turmoils from Biden stepping out, Kamala Harris coming in, assassination attempt. It's been a lot of turmoil, good for news and keeping people glued to the TV and watching the things that are going on, but elections from an economic perspective, there's sometimes this pause, and most every 4 years there's a pause in certain economic activity. There's caution. Hey, there's going to be a new government. What will they do, particularly in the beginning? They're going to change things. They can put more tariffs on, increase taxes. What are they going to do that could impact the overall economy if we're talking about it from the Open Treasury podcast perspective? And so there tends to be some caution. And so I guess one of the things we've seen is treasurers are moving forward with actions. I think that's healthy. We've seen that lighten up. I don't know that there's data. They're buying technology. They're making moves. They're still cautious. It is an election year. And so it'll be interesting to see how that plays out over time. Once the elections are settled, will that go back towards rapid growth, or will there be more concern? So those are some of the things that I'm thinking about on a macro level.
Well, we've reached the conclusion of this episode. We're grateful for your valuable insights, Craig. Many thanks. We also want to express our sincere appreciation to our CTM File audience for tuning into this edition of the Open Treasury podcast. Please subscribe to our podcast and check out the show notes for links to the articles discussed. Thank you and have a great week. This podcast is provided for information purposes only, and statements made by CTM File or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.